Hey guys, what's going on? I'm Steve. Welcome to the channel. We talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, hit the subscribe button. Trust me, you won't regret it. If you're a returning subscriber, welcome back. Guys, the JOLTS report dropped today, which is basically the job opening and labor turnover report. Just so you get the words JOLT. And the report was surprising. And it's like we're going in the opposite direction of what we're trying to do. Everybody trying to get things to go, the employment to go up and all that stuff. And we getting the opposite effect. So as far as Fed Chairman Powell, man, I feel so bad for the guy. You know what I mean? He like, I can't win for losing. But what the JOLTS report, a little bit about the JOLTS report real quick. What it is it measures how many job openings are posted, right? In a month-to-month basis. How many workers are hired to these jobs, and how many people quit as opposed to how many layoffs. So it gives like a good barometer of, how the job market is, and if the Fed raising rates, if it's all going along according to plan and they're seeing some type of dent in this inflation thing. But the thing that was funny is in this report, it seemed like with the numbers that came across, which was 10.72 million jobs available, right, in the nation right now. Instead of it going down, it's an increase of 437,000 jobs from last month. So it's like, man, the man can't win. It equates to 1.9 jobs per available worker. So it's almost a 2-to-1 ratio of jobs as opposed to people that are unemployed. So it's kind of like we got a long way to go. Like I always say, we got a long way to go. Now the rate decision tomorrow, or when they're going to do their interest rate, if we're going to go 0.75 basis points, or a whole point, or half a point, nobody knows. That's going to be tomorrow at 2 o'clock, like it always is. But tomorrow, Wednesday at 2 o'clock. So we'll know a little bit about what the rate hike's going to be. But getting back to this thing, guys, I just thought it was funny, man, because, just looking at it. Now, this is just a prelim because, they're going to be there. This is the first day. Tomorrow, you get the rest of the stuff, right? The thing that's funny is this. What we know to be fact right now is such. Worker demand is strong, and the labor market is still holding up, right? Job numbers have stayed solid, but they're slowing. The hiring. Job openings outnumber unemployed workers. Like I just said, 1.9 jobs to unemployed workers. Employment, the rates are elevated, but they're not off the charts. You know what I'm saying? As far as layoffs go, though they're heavily reported, they're still below the pandemic levels. So, as far as this, this takes a whole new thing. It takes a whole new thinking and understanding of how hard it is to get this inflation thing going. And the reason why I say it like that is because it's so many different factors. We got import goods, export goods. Us as consumers right now, a lot of us don't even know that we're in some type of recession. You hear the words, but a lot of people don't, pay attention to it. Look at the consumer spending. It's still high. You know what I mean? The American consumer is resilient. You ain't gonna tell them nothing. They trying their best to slow down spending and all that, but a lot of people ain't paying attention to the situation. And we've had a lot of rate hikes. From where we started, when the Fed first started with these rate hikes, guys, we've been getting a lot of serious rate hikes, 0.75, 0.75, and the like. And it's like like I said, we barely making a dent. But the thing that's funny is, moving along and moving forward as investors and stuff like that, it's no rush to do anything. Now, I'm not telling you not to buy any stock or anything like that. And this is just brief because I'm going to get back to this thing with this jobs report. But I'm not telling anybody, you know, it shouldn't be no fire up under you to go and buy, you know, stocks right now. Now, I'm not telling you to not look, but this is an excellent opportunity. Like, I liken it to where we had some drizzle, we had some rain, the storm is above us, but it's not pouring like we expected it to. But, you know, you still see the effects of us being in the storm. It might be cloudy or whatever. And when I talk about the cloudiness, I'm talking about a lot of stuff you're seeing with these earnings reports. So you're seeing that it's going to be a heavy rain. So in that time, you could be preparing yourself. How do you prepare yourself? Doing a little bit of studying, man. You know, understand, get your portfolios in order. And when I say that a lot, when I say get your portfolios in order, what I'm talking about is learn a little bit of these terms, what these terms are. You know, earnings per share and all these other things. Learn how to read these financial statements. Don't just look at what's on TV or the stock price. Really take the time, because I mean, we have time right now. Really take the time to understand why you're buying the stock, why you want to buy the stock, what you like about the stock. You know, you can really educate yourself and become a better investor in times like this where things are slow. And during this time, you can still be saving up your cash reserves, because this thing's going to last a couple of years. You can see it. Now, I'm not saying wait 18 months and then say, hey, I'm going to buy stocks, because a lot of things are subject to change. Anything can change. We're just going by the timeline that a lot of people are, you know, that are up there fighting this inflation are saying. And that can change too. You know, you don't put too much faith in what somebody says. You put faith in what they do. And, you know, but I just wanted to drop that on you real fast. But getting back to this, man, I didn't mean to jump off that real quick. It just hit me in the mind. I've been wanting to say this, but I always forget. The thing about this job, this JOLTS report that's kind of suspect is this. And this is the reason why I was laughing. A lot of this stuff that's reported, I don't even know how they be getting these statistics. Because think about this. When a company posts a job, they'll post a job on their website, another website, it'll be on Indeed. It might be somewhere else, whatever these other hiring websites to be. But it'd be one job, but it'd be multiple posts. So I think a lot of these numbers that they have, like where they're like, oh, it's 10 point something, $7 million jobs available. A lot of them jobs be recounted because they on different websites, but it'd be the same job. So a lot of, like, I don't really read that much into it. It's just really funny how they just came up with these numbers. And if the numbers are true, you know, because I mean, they report them as true. It's just hilarious about how, you know, when these numbers come out, I know the federal government or somebody probably in there like, oh, you know, you know what I mean? But, yeah, I mean, the way jobs report these things, I'm like, how can you accurately go on this? And I think this is just one measurement of the jobs report. And I mean, it's a good thing. I mean, I guess it's interesting read. It's an interesting read, or, you know, indicator of what direction they're trying to go in. But I mean, this is not the sum total of anything, guys. But yeah, I just wanted to chime in and talk a little bit about this, man. I thought it was funny, you know, that it's $10.7 million job, and it's like 1.9 jobs, almost 2 to 1 for every person. And it's like you got people out here that don't even want to work, and there's so many jobs available. And it's like, it's just a funny dynamic. Like the Fed trying to get people to lose the jobs right now to make the inflation come down. And there's so many jobs, man, that till these jobs get filled, or like somebody gonna have to pay for this. Like they're gonna have to either do something with these companies, like raise the rates the way these companies, like, you know what? Don't even worry about the job now. Somebody's gonna suffer. It's gonna be us, or it's gonna be big corporations, or it's gonna be somebody gonna suffer. It's gonna be some type of suffers. I mean, because this thing right here, man, this is going to drag. And this is an interesting read. Since I've been getting into this, really getting into it. I mean, it's very interesting to understand how politics work and stuff like this. And we'll see, guys. Stay tuned. But yeah, drop me a comment, guys. Let me know how y'all feel about this whole situation with this job market and just the fact that it's 1.9 jobs, you know, available per every available worker. And man, just tell me what y'all think. But also let me know what your investment strategy is going to be leading up to the end of the year. That'd be a good thing to talk about. But yeah, man, as always, man, I'm coming to give you my video, tell you how I feel, thinking about what I'm thinking about doing today. And as always, like, comment, share, and subscribe, guys, and I'll see you in the next video. Thank you so much for spending time with me.